So the dollar has been going up for several weeks, but in the last couple of days it has pulled back from the highs ahead of the US jobs report. Today is Thursday, 9th of March 2023. So I think the dollar has further room to the upside because of the macro fundamentals supporting it, i.e. the Fed is getting hawkish and they're going to raise interest rates more than had been expected in the past. This should keep the dollar supported in the long term until something fundamentally changes. So dips on the dollar should be supported, I reckon. Hence, I reckon the dollar Swiss is going to go higher from here. So let's start off by drawing a few lines on the chart. First line here at 93.75 is the key level of support for me on this daily time frame. Okay, so this level was resistance on this particular day on the on Monday. On Tuesday we broke above it. Wednesday consolidated. Today, Thursday, we are retesting that level as possible support. Okay, so that's a key level of support for me. And what we need to see next is for price to go back above the low of Wednesday's range. Let's color that in black. So as soon as we go back above 93.89, call that 93.90, and hold there on an intraday basis, then that might ignite technical buying above that level. So for confirmation, that's what I would be looking for on an intraday basis, i.e. the hourly or 15-minute chart, etc. Now, where do we go from here? Well, the first target for me is these equal highs above the recent range at around 94.40. There's going to be lots of stops resting above that area because people who had been selling this will have placed their stops there, right? So that's the next pool of liquidity for the market to aim to reach. So in terms of levels above 94.40, you have nothing that stands out here and until 95, the round figure. Then you have the 200-day moving average coming in at 95.65-ish or thereabouts. So those are the kind of next levels I would be aiming for on a potential bullish breakout. You could also draw Fibonacci's from the most significant high here to the most recent significant low, and you can see that 38.2 comes in at 94.75, while the 50% comes in above the 200-day moving average and so on. So you could leave that on the chart in case price eventually gets to those levels. It's also important to know where the idea would be wrong, and let's draw a few other lines. The last kind of area of support I'd like to see a price drift down to, is 93.32. Call that 93.30. This was previously resistance. It found support here on the retest after a bit of deviation below it. So what I don't want to see from a bullish point of view is for price to go back below this big bullish engulfing candle we saw on the 7th of March on Tuesday. That was on the back of the hawkish speech by Powell. Okay, so that's the confirmation there for you guys. You don't need any further confirmation. I don't think if it goes below the low of this candle, then the bullish idea would be completely invalidated. Okay, so I'll put a line there and call that the invalidation level. Now, I did mention there are a couple of other levels where it could drift down to, like 93.32, where we also have the 21-day exponential. Even if it were to get to that level, the bullish idea would potentially still remain valid. But ideally, what you want to see is shallow pullbacks in a strong bullish trend, right? You don't want to see deep retracements. So this is the hourly chart, and in the last hour, in the last couple of hours, you can see a bullish hammer candle here. This was the drive down in the European Open at 9 o'clock this morning. So what you could do is put a level here and set an alert above the high of this candle to alert you if price goes above the high of that candle, because if it does, it would suggest that people who sold on the back of this, they are trapped. Their stops would be in trouble. So at that point, the bulls might take charge again and cause prices to move decidedly higher. If you like this video and how I analyze the markets to look for trade ideas, then make sure to join my private group, details of which can be found on my website at tradingcandles.com.